What is going on, my friends, and welcome back to another video on the channel. Well, in today's video, we are going over Sandbox as it is tiptoeing on a tightrope over this huge valley, and it could be looking at an explosive fall, blah, blah, blah. Let me be a little dramatic, feed my ego here. But what we're seeing right now is the fact that Sandbox is looking at, trying to establish some support on top of a key level. This is, of course, a very crucial moment because the loss of support at this point could result into some type of continued downtrend. So in today's video, we're just going to be taking a look at what all we're seeing from the symmetrical triangle that we've been tracking for the last 10 days and how we can expect this to play out going forward with some price targets, some breakdown targets, and much more. So of course, let's go ahead and let's get into it. So one thing I wanted to talk about is why, first and foremost, why these symmetrical triangles come around and why do they tend to be such strong patterns to where if we break to the downside, we go really far, but if we break to the upside, we also tend to go even further, okay? Now, the reason that is going to be is because of our Fibonacci retracement levels, and some people don't realize that that's actually what creates these symmetrical triangles. So what you can do is you're going to go from your most recent low. Let's go to our local low here, and we're going to go up to the high that was made right back here on November 25th. And all we're going to do is we're going to take some boxes and draw the 618 to 786 zone for each of these moves, okay? So for this one, it's going to be right here. Then what we're going to do is we're just going to get rid of the Fibonacci, and we're then going to now go from the swing high we created down to the low that we set there. So we're going to see where does the retracement to the upside go to. So whenever we take that Fibonacci, boom, and we draw it from swing high to swing low, we're going to take our green box and we're going to draw out where our 618 to 786 zone was. Now, very similarly again, we're going to go from this swing low to this swing high to see where we retraced down to again, okay, on the next move. So swing low to swing high, boom, there we go. And you can see we're going to take this box and boom, there we go. So what can we see here? Well, what we can see is that when we're creating these symmetrical triangles and we're putting in these lows and we're putting in these highs, we're actually reacting to our 618 to 786 zones off of each one of these moves. So we went 618, 786, 618, 786, 618, 786, and we keep bouncing in between these retracement zones until we eventually clear one and then we take off. Now, of course, that's going to be incredibly important simply due to the fact that we can see over and over and over again that when we clear these Fibonacci zones, they have tendencies to be the doors for us to see massive continuations. So it's not just like these symmetrical triangles just so happen to be important. No, we're interacting with key levels of Fibonacci extension and retracement, and when we clear them, they have tendencies to see massive growth to the upside. So that's just a little bit of an education piece on why these levels and why these symmetrical triangles tend to be so important. Now, generally speaking, we are going to see that these symmetrical triangles are going to be bullish if we're coming out of an uptrend, okay? Generally speaking. Now, not only that though, but they actually have some very clear breakout targets. So what that means is the way in which we find it is we're going to take the distance from the top of the symmetrical triangle to the bottom of its most recent wave, okay? And we're going to take this distance. This is sometimes called the pole, or this is sometimes called the flagpole if you're looking at it as a bullish flag. But I'm just looking at it as this distance here. And we're going to take it and apply it to wherever we could see a possible breakout. Let's just go and say right here. So for in this example, if we were to see a break to the upside, the technical target of this consolidational event is somewhere up around $12.38, which could look like some type of growth pattern of well above 80 to 90%. Now, of course, this is reliant on the fact that we break to the upside. Now, personally speaking, although we are kind of walking the tightrope on this key level of support, I do think we're going to break to the upside. Now, the reason that I say that is due to a few things. First and foremost, on the 4-hour charts, we're seeing a convergence of the blue and orange EMAs. Now, generally speaking, if we can get this blue EMA to cross through the orange one, straight, something similar to this, we are usually going to see a big move to the upside. I'm under the belief that considering the fact that we are on touch number 4 of the symmetrical triangle, of course, 1, 2, 3, 4, that if we get that big bullish cross, that blue-orange cross on that MACD, that we will see some type of, push up through the top side of the symmetrical triangle. That's just my belief, okay? That's just complete theory. That's, not really backed by fact, okay? But we also can look at something like the RSI and go ahead and say that we're seeing some divergences happening at the moment that could be telltale signs that the price is ready to break to the upside. The most obvious one being the fact that we put in a low here on November 27th, and then we put in a low here just actually earlier today. And you can see that in that time in which we set a higher low, on our RSI, we came down to set a lower low. Now, of course, the price could at some point roll and come down to set a lower low on the price, and it would kind of invalidate this bullish divergence. But at the moment, it is bullish divergence to say the least. We can definitely see that forming, and if we do get a bit of a bounce here and we continue this bounce here, this bullish divergence will be confirmed, which could be enough bullish momentum in itself to allow us to see that continuation of a push to the top side. Okay, so that's what it's going to look like, and that's why I believe we're going to see a break to the top side. Now, if this is to happen, when would I be buying? When would I be confident enough to get some more? Well, all that's going to look like is, do we get some 4-hour closes above our most recent swing high to swing low Fibonacci 618 to 786 box? In our current example, that looks like $7.57. If we're going to go ahead and make the move to the upside, we could see something like this where we break out and we bounce off this 786 level and we continue back downwards to maybe even come back down to find some support before making that move. I want to see that we can clear above $7.57 and then that we're able to hold it. And if we're able to hold it, we're looking at some type of W here, of course, with maybe an even flip of resistance into support, and that then looks real good for me that we're going to go ahead for some continuation forward. So in terms of if we're making the move to the upside, be looking for 757 as your key level of resistance. Then once we clear it, we're likely going to work our way back up to some higher highs, maybe 8, 9, 10 dollars. Now, in the event in which we do break to the downside, what I would expect to happen is that we'll start to interact with our EMAs near immediately. So what that's going to look like is I do believe we will end up interacting with this 100 EMA on the 4-hour charts as soon as we would be to break to the downside. Okay, now I don't think that this level is going to immediately fail. As you can see in the past, we have touched it a few times and have immediately worked our way back up. So if we do break to the downside, let's look for this immediate interaction, probably somewhere around $5 and I would say $5.65 at the moment, which could be a nice little fall of, somewhere around 13 to 12%. And let's look to see if that level holds. If that level holds, of course, I do think we will still be able to work our way back to the upside. But of course, I will update you guys as that does happen and as it does play out. But that is exactly where I think it's going to go almost immediately. So it is going to be important, in my opinion, to keep an eye on. So overall, that's going to be about it for Sandbox. I kind of just wanted to talk to you guys about what we're seeing, but do a little bit more education too about why these symmetrical triangles are important, how do we find breakout targets, and what we can expect from them as this thing does go forward, because we've been seeing them from something like Sandbox all the time, right? We're seeing these triangles forming consistently. So overall, again, I hope you guys did enjoy today's video. If you did, of course, you can let me know by smashing that like button and subscribing to the channel if you are new, and I'll see you all next time. Peace.